In this week's episode of Trading Tips with Jim, which will be the last for 2025, I will give you 5 stocks which I think will do good both short and long term, and one of them may be a Christmas winner. I will give you some additional information. Of course, you just have to stay tuned as we head into week 51.
Tick-tock goes the market clock. Bulls run wild, bears don't talk. Up or down, it's a coin flip game. Buy low, sell high, don't lose your grip. Stay sharp, stay fast on this trading trip. It's Trading Tips with Jim. Win or learn, never give. Stack your knowledge to the...
Last week I said I think it will be a green week, and so far a green week it is. All the major indexes are up. Nasdaq by only 0.07, but the futures for the day, it's still Friday here, is indicating that it might be a green day for Nasdaq. The bigger question is, what do I think will happen in the week ahead? We are heading in for the last few weeks of 2025. Usually we have a Santa rally. Usually this period is very good, but will it be the case this year? Nasdaq has found a pivot up just under 23,700. The previous top just around 24,000. Now we found a new top. RSI is getting very high, and most likely, this is a time where we will see a fallback to 23,000 points, where it again will try to push upwards. But I am not so sure it will happen because of the time of the year we are in. And very often when we are in a situation of overbought RSI is when we get the so-called rallies. Has happened a lot of times. I will not be surprised if it happened this time. Buy signals both from the short and the long-term medium moving average for the Nasdaq chart is within a rising trend. Everything is indicating that we will push upwards. My target, as I said, I would not be surprised if Nasdaq hits 25,000 points within 2025. Will it be the case? I don't know. From the looks of it, it is a fair chance. Pivot top is found, but can be false. RSI is very high. Volume is not following the market very well. You can take that both ways, but I like it that it is flat right now, and it's not particularly high, meaning that there can be an influx of money. So just to put that away, what will next week bring? Will it be up or down? We will have a quick look at the buy and the sell signals. And the buy and the sell signals says the same thing they said last week. We are not in a position where it is a clear buy signals. We are not in a position where it's a clear sell signals either. But we have coming from low to high, and it's still potential upside. Across all the tickers that we analyzed, 30% is giving buy signals, a little down from last week where it was 31. If this number gets closer to 40, it's indicating that market is way too high. If we go to Nasdaq, only 18% of the companies are showing buy signals. Plenty of room for stocks that hasn't performed over the year to perform. And among the 5 stocks that I will list today, you will see that some of them are exactly that, stocks that hasn't performed, but right now they are giving different buy signals, and it may be that these will finish the year strong. New York Stock Exchange only 36% buy signals, London 30, Oslo 35. As I say, all of these are not very high. They are starting to get, but not in the level where we classically would say it's a good time to sell. National Stock Exchange, for instance, only 15, Tokyo 27, and China 20. I believe for anyone listening from India, and I had a few followers for sure, that National Stock Exchange of India is going to perform very well during the next few weeks, ending the year strong. But we will see. Based on these 2 things, and before saying anything about the major events next week, I would say it's a fair chance that Nasdaq will end yet another green week next week. It might be a little bumpy, but overall, I think it's a fair chance that the markets, Nasdaq, Dow Jones, New York Stock Exchange, etc. will go up. So again, I bet on a green week. There are some economic numbers coming up. Some of them will have effect on the market. Tuesday will be the first with non-farm payrolls and unemployment rate. Nothing special is indicated in these things. We see that unemployment rate is stabilized, pushing a little towards the upper side, but nothing new in this. More people are getting back to work after being out of the workforce. This puts a toll on the industries, but at the same time we see some industries laying off people, but some are again starting to hire. The forecast for the payroll is that it will increase, and the unemployment rate is expected to be at 4.6%. As I said, none of these are very, very critical for the market. I don't find them to be. More interesting is when we move over to Thursday, where we will have core inflation numbers. These have the potential to absolutely push the market. But again, prices are slowing down. We see it all over. And my main argument, the easiest argument that I can give you, look at the oil price. Because it is energy is such a driver for inflation in general. Tariffs didn't cause new inflation, just minor issues here and there, but in general the tariff wars didn't have the effect the market said it would, or at least experts said it would. You listening to the StockInvest.us podcast Trading Tips with Jim, you know that this wouldn't happen because I told you it was exaggerated, and I used the tariff scare to buy shares super cheap. I don't think inflation will come up. Oil prices staying at $58, been bouncing up between 58, 59. Everything indicates that oil will go down and energy will become cheaper, and when energy is cheaper, prices will lower. And if we look at consumer item products, a company like PepsiCo said, we will work for cheaper products. Who else have said the same thing? Well, Starbucks and tons of others, Chipotle, all of these have said the same. Even McDonald's said the same thing. We need to make affordable products, and these things are being pushed out in the market, which again will ease the stress on the consumer. No big major news coming up next week except inflation on Thursday. Of course, someone will look at the Michigan consumer sentiment on Friday, but will not play big role. Inflation is expected to come in by 3% year over year. By the way, I think it will be closer to 2.8, but we will see. It is time for some stock tips. And I said I would give you 5 of them. Actually, I will give you 7. First thing, and I argued for this over the year. Started maybe 1.5 years ago. I said, personally, I will go more into dividend stocks because I believe it will be more safe. Here are 2 dividend-paying stocks, ETFs, which will, or with high probability, return very, very good dividends next year. I believe that if you can afford it, you should have some dividend stocks. Not care too much about how they move price-wise, but look more at the dividend they pay, because markets will go up and down. It's a fair chance that we will have a dip. I told you this already. I think it will happen after Christmas, where market will depart. We can get into a slow market for years. No one has the recipe, exact recipe how markets will be. And in a situation like this, you probably would like to have dividend share, which will pay you dividend. And this dividend you can use to invest back into the market. And if you don't care too much about the price going up and down on the ETF, because you will stay long term in the game, you will sleep even better. First one is UBS, crude oil, USOI. USOI is the ticker. Last year it gave 20% dividend. So far this year 17.6% dividend, paying out usually around between 0.5 and $0.8 per payout. Absolutely interesting stock, pays very regularly, and if everything goes okay, you might see 15 to 20% dividend next year if you sit in it. It is ranked the highest in my own system. I created a system to look at the best dividend players with the highest chance of an upturn and a few other things. This one rank among the top one. Another one is silver, and anyone following silver knows that silver has doubled. UBS Etrex silver shares SLVO up 20% last year. Currently so far 18.39% this year, paying around $3 to $5 every single quarter in dividend. The price is roughly around 100 now, 100.26 per share. Just so far this Q4 paid $4.09. If you can afford it, have a few of these. Just enjoy them, let them pay every month. Don't care too much because markets will go up and down. That brings me forward to more stocks, and we will start with a very risky one. If you follow the podcast, and I recommend you should, you can get some bits and pieces. A long time ago I said that iRobot is heavily shorted, and my systems believe this stock will have a rebound. It will get into a short squeeze, pushing upwards. And if you were lucky and you were able to get iRobot at $1.30, around there, 1.30-33 low, you would have almost 3.5 times return, as it sits at $5. Stock is still heavily shorted, and it can continue the short squeeze upwards. I don't know, so far it's taken out that very first potential, the stock which I think could be a candidate, but here you have to listen very, very carefully, because this is a high risk game. It's a stock I mentioned before. And it should only be a part in your portfolio where you absolutely can stand to lose, because this stock may go at some point be delisted. It's been hammered and hammered. It is down more than 99% of the top value. It is beyond meat, plant-based meat products. The need for protein is huge across the world, and when it was launched, it was in the middle of the woke. Everyone was trying to buy this one. Beyond Meat, BYND. But the professionals, they started to short out mass, and this stock is so shorted that there's no other stock shorted more than Beyond Meat. They are betting for this one to absolutely go bankrupt. And using another system which I have developed, which looks at the burn rate and tries to predict when it will need cash infusion. This one is among the top one. It has a score of 84%, meaning that it's super risky. It is burning 15 cents per month in burn rate. Has a runway of only 11 months left, will need a cash infusion, and the system expects it to be actually before Christmas. And here is the thing, the stock is currently around $1.18. This Beyond Meat I'm talking about. If the stock managed to raise capital, it will not be bad for this type of stock. So if we get a message tomorrow or next week that Beyond Meat has raised enough capital to run for 2-3 more years, it is the thing that will trigger a push in the price up. And knowing that the stock is heavily shorted, if it happens, and I underline that twice, maybe even 3 times, if it happens, it can go on a very, very frantic roll. It might be iRobot all over again. It might be 4 times, 5 times the value. But the risk is at extreme levels. So if you want a risky trade, which may very, very well pay off very good in the last few weeks of 2025, Beyond Meat is one of them. But it comes with a huge price. This one, as I said, can be a catastrophe. It will not be guaranteed for sure, but it holds the huge potential. Personally, when I do these things, I just put them in my high-risk portfolio. I have a high-risk portfolio, which is money I'm absolutely willing to gamble high with, and in a basket of maybe anywhere from 5 to 20 stocks, depends how much invested I'm into the market. I expect maybe half of them, 70% actually, to be total losses, while the rest of them goes fast and high. Will Beyond Meat do it? I do not know. That brings us to some other stocks which has better potential. Before listing these, let's go back to some stocks I mentioned last week that I thought could do very well. They have analyst estimates says that they will go up. Our system says that they will go up. I argued for both of them, and I promised to just give a glimpse back to how it is going. There were 2 stocks, Evolve and Amcor. Evolve ended Friday at 667 last Friday, currently trading at 684, being up 2.5% so far. Amcor did a little better during the week when I said this one I believe in for long term. These are not, it was not weak stocks, because these are stocks which is expected to double over the next 20 months. Amcor, for instance, started 43.23, currently at 47.04, up almost 9% last week. These 2 stocks are stocks that most likely will double over the next 20 months, according to analysts and our in-house systems. May not happen, but so far they are on the right track. 3 stocks which has the potential to do very good. I like what I see. They have triggered some of the most interesting buy signals. These buy signals are a bit slow, meaning that it may not happen today, may not happen next week, but there is a high chance that they will stand strong in a bad market with a nice potential upside. Risk should be somewhat medium, for some of them maybe even low. But again, these are stocks which triggers more long-term buy signals. And I believe that it's a good choice. Adobe is one of them. DoorDash is another. And Aeva Technologies is the third one. Aeva Technologies, for instance, works with LiDAR chips, and everyone that follows the market knows that self-driving taxis is the hottest of the hottest right now. It is one of the reasons why Tesla price is so high still, because Tesla will launch robots, and they will launch self-driving taxis. Actually, these taxis are already out driving, but in mass scale. A market which, if I remember correctly, is estimated to have a 500 billion yearly turnover. Huge market. Aeva Technologies work with the LiDAR chips, which provide the self-driving capabilities. That was 3 stocks. 1 or 2 of them may actually do very well during the Christmas. They had a little beating. Adobe, for instance, had a little beating. DoorDash and Aeva Technologies, the ticker ADBE for Adobe. It will be Dash, D-A-S-H for DoorDash, and Aeva Technologies will be AEVA. Aeva Technologies for LiDAR. There you have some, hopefully, good stock tips. Brings me into the very last part of this episode, which will be the last for 2025. 6 years in a row 7th year of doing this is coming up. As we speak, my total portfolio had a little down over the last few weeks. In total, the total over asset, it is not the peak time. Peak time was a few weeks back. But we will see how it will end. One of the reasons why I'm not at the peak, 2025 been such a good year, and when I say a little downturn the last 2 weeks, it's not, my portfolio is not at all-time high. Especially one stock has pulled the portfolio down because I am huge into NEO. And anyone following the podcasts know that I bought NEO a lot, several times, getting some low at 350, some much higher, getting into a very nice average. And NEO kicked off, went all the way up almost to 8. I think it was 793 or something like this high. And then fell back to just above 5. And I told you, and I will tell you again, I have been buying NEO for the longer run. I'm betting in the longer run. It's one of the more heavier positions in my portfolio. And this one being down dragged my portfolio down. Will I be able to end 2025 on the top? Meaning that my portfolio will be at all-time high? I don't know. NEO has to perform. Or some of the other stocks which I have added all have to run very hard. We will see. You will not be able to know because I will only be back after next year. In a $1,000 challenge, the portfolio, which started with the intent of growing $1,000 as fast as I can. We are currently sitting just above $3,600. So 1,000 become 3,600. I wanted to be at 10,000. That was the goal. To get around 10,000 being split into more stocks, push it upwards to 100,000 over next year. Magic has to happen if we are to end 2025 at 10,000. And in my world, it will not happen. There is no likelihood that NEO will end the year being up 3 times from today's level. There is a fair chance, analysts believe it's well, that it should be more close to 8. That will only bring us back to the high of 5,555, which was the highest the $1,000 challenge was during the year. It's a fair chance that come 31st of December, that NEO will be up. Usually many stocks that has been beaten during the year has a little rally in last part of the year, and especially in the beginning of the new year. It has to do with different tax rules in different countries. Getting less of this, as many now keep stocks inside instruments, which allows to carry tax from year to year and only pay when you take out of your account. Anyway, NEO stays in the $1,000 challenge. Hopefully when we get to the end of this year's, the last few weeks, we will see it higher, and hopefully the $1,000 challenge will end above $5,000. Manage to grow $1,000 up to $3,589.42 as we speak. Was up at 5,555. Hopefully it will be back there during the next 2 weeks. We will have to see. I will have to make a discussion with myself if I will continue the $1,000 challenge as we head into 2026 with the attempt of growing that 10 times up to 100. We will have to see. You've been following the journey all the way, nothing hidden here. And as usual, I will only buy before, after telling you. You will always know in the $1,000 challenge when I change a position. Using the last few minutes of this podcast to thank you. A lot of you have been with me for years and years. And I saw one funny comment on YouTube, where one said he liked my jingle so much that he would use his on his phone as a wake up alert. I like it too. 2025 was such a good year. Hopefully it still will be a good year. I hope more than anything that you will have a super end of the year. Prioritize family, friends. Trading is here to stay. During this year, I try to teach you a few things, but it's all about your mindset. I hope many of you can end the year reflecting on how you trade. Maybe go a little away from this active trading and more into investing, paying more time to find the right stocks. I gave you a lot of stocks now, some with super high risk like Beyond Meat. I gave you 3 stocks which showing more long-term interesting signals, knowing that we see a shift right now. We see a shift where money is going a little out of AI stocks into more substantive stocks, then it might be that just the 3 stocks which I mentioned, which have given more long-term buy signals, may be winners of 2026. I don't know, but change your mind, change your focus a little bit, try to diversify your investments into different things, but more important, spend time with family and friends. That time will never come back. Markets will always be here. Hopefully I will be here in 2026. Until then, just have a merry Christmas.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information you agree and are held liable for your own investment decisions.